saying about identifying the market, because I've heard you talk about this and it's super impressive, the information you know and how you understand where to buy, because you're looking at so many different factors. It's not like just follow the lead of someone else. You're researching this constantly to look at where's your next move. So how do you go through that process?
Look, it's data driven.
Yeah.
So you look at mature markets like Sydney, for example, mature in relation to the rest of the country. Sydney is the number one market in Australia, but it's unaffordable for us to even produce the stock there or even buy the site, right? So what we identify is the demographics within that location. A really good example would be Randwick, which is 4 Ks from the CBD.
Yes.
I think the average weekly family income of that demographic in that suburb is about $3,500 a week, right? Where you can go to, say, Brisbane, same distance, 4 or 5 Ks from the CBD, same demographic, $3,500 a week weekly family income, right? So 10 out of 10 affluent score, that's how we score it.
Yeah.
But a house there will cost you maybe $1 million. Now a house in Randwick, median price is $4 million.
It's insane.
So it's that value proposition and going, okay, well, I can identify value. It's the exact same people with the exact same jobs, with the exact same incomes, right?
Yeah.
That's going to get pumped up
Yes.
in Brizzy.
Has to.
So much more market.
Guys, we've got the 2 best developers in Australia in the room today, so I'm really excited about this. And the great part about having you both on today is that we've got 2 completely different types of developers. So we've got, obviously, the people listening probably know Justin quite well because he's on this podcast every single time we do one, and he's in the luxury market and does these passion projects that no one can tell him not to do something. He just gets out there and does it and then sets a new record on the Central Coast, for instance. We've got Zah, who is a really influential person in the property development market. And I really should give him a big intro, but we've just done another podcast that we have, which is Strategic Chess. And we delved really deeply into your upbringing and how you made yourself turn into the person you are today. You didn't have handouts. You didn't have money coming in from different avenues. You built your wealth on your own. And that was a really inspiring story. So I would very much encourage everyone to listen to that one. But today we want to get into your property development journey and how that started and talk to you both about the differences and what you'd recommend, builders essentially, where to go. So first of all, just give us a bit of an intro, Zah, I guess, in terms of your quickly overview of how you got to this property development journey from the beginning. Yeah,
so like we said in the other podcast, I started in 2014, so almost 10 years ago. And it was a small 4 townhouse project in Newcastle. And we actually didn't even really make that much money from it, but it was a good experience, and we got to, experience the whole, dealing with builders and architects and all of that sort of thing. And then we entered into that investment space after that. And I thought, you know what, I need to actually accumulate a little bit more capital before I jump into this again. So I started JVing with a lot of other developers, so apartment developers and townhouse developers. And we specialised in the investment product. So very much different to Justin's. We did, affordable homes, sub $1 million, or at the time it was like around 500 grand. And they moved really well. And because we were in that sort of commercial space, they needed to move to get the funding. Yeah. So the easiest thing to do is move them to investors. And if you're at that affordable price point of $500,000, $600,000, you can get pre-sales pretty easily, right? As opposed to doing a big luxury development of, say, 2 duplexes or something like that. Yeah, it's an owner-occupied market, and you're chasing a lot of cash for that, which at this present time I think is actually a better product to do. I think there's more profit in it. That downsizer market is massive because they don't want to live in those big blocks, big mansions anymore. They want something in a much better location. And a little upkeep, all of that sort of thing. We're playing in that space now ourselves because that's where we see the opportunity. We've managed to pick up those sites where these baby boomers are sick of the maintenance of the big yard. So we've sort of steered away from the commercial stuff for a little while because the banks are being really, really hard on valuations and all of that sort of thing. So finance is an issue at the moment. But really, that's our space. Our space is developing a product that is investment ready. That way we find that we can go at scale. We can do a lot more of them. We can play in, I guess, multiple markets.
And that's because the TDCs are a bit not as much, yeah? So, and you're getting your pre-sales done soon, on to the next one?
Yeah, exactly. Yeah. So once you hit your pre-sale targets, you can get relinquished of that debt,
100%.
Right?
Yeah.
And then you can roll into the next project. And when the market's going gangbusters, it's a mad business to be in, right? But right now, it is tough.
It's a tricky one.
Yeah, and it's hard to get investors on board, right? Like a lot of people are scared. The interest rates are through the roof, and to even get those pre-sales, it's tough. And these, lenders now, they're being really hard on guys like us. They're saying, okay, well, instead of 50% pre-sales, we now need 80, 90%, right?
Yeah, definitely.
And to get those 10% unconditional contracts, it's hard. And you've got to pay big money to these investment groups to actually move that product. And you've got to be very liquid as well.
That'll be the pricing point too.
Exactly.
It makes it.
We're getting crunched now.
Yeah.
We're on construction because, and it's not your fault as in being builders. It's just cost of materials, cost of labour. It's difficult, and land prices haven't really come back.
Yeah.
So right now we're finding that the margins aren't there. We're sort of if we were to develop the product, we'd be doing it for free, and no one does anything for free. So there's no margin there. So I guess the solution at the moment for our space is probably at least 15% price growth. So that 15% is now the margin for us to make it feasible to go, okay, let's roll these projects out. So there's a lot of risk at the moment.
Yeah.
And a lot of developers like myself aren't launching projects. We're sort of just sitting on sites.
Yeah.
And we're
waiting for growth.
Yeah, or we're self-funding and we're just seeing it through.
Yeah.
So a bit different to you, Justin. We try and operate on that volume and that scale, but it's incredibly hard at the moment.
Yeah.
Definitely.
And we talked again last podcast about the risks involved in anything to do with developments, investing, business ownership is probably what we talked about, the biggest areas of loss and difficulty and challenges. So I guess for the people who didn't listen to that one, going back to the fact where you started, both of you, there were risks and you took calculated risks or maybe stupid risks. I don't really know. We'll go into that.
Bit of both.
Yeah, see, and that's pretty normal because that's how you learn. And we talked about building muscle and resilience and all those things that it teaches you.
Yep.
But let's go into probably whoever wants to go first in your journey where you started and what you did lose and then how you bounced back from that and made it to where you are today.
Would love to hear from you, Justin.
All right, so obviously I've spoken about the journey of my one a few times. Like I started off sort of self-funding. Oh, not at the start, obviously raising capital through the properties that I had. So obviously buy one, renovate it, raise some capital, get another vow, get the rest of the capital, finish it, sell it. So that was my model for, I don't know, maybe 8 houses or something till I got the capital to where I needed it to be. And then that's when I eventually then obviously started the external sort of development business and started doing on the outside and buying sites and started doing more premium properties, really high end. And the reason why I'm sort of delving into that market now is obviously because I love it. I love trying to design something and build something and push it to what I can and try and develop what no one else is developing here. And it's a passion thing. And obviously the way interest rates are now, generally people who are buying $5 million plus properties up here on the Central Coast aren't really affected by interest rates. They obviously consider it, but generally they're buying them with no loans, some of them with loans if not, but they're not too affected by the interest rate. So that's why I stay in that lane at the moment, and because I do love it and it fits our brand and where we want to be building. Even when we build for other people, we try and now make sure that build suits our brand in our developments. So that's what we do with that. But yeah, coming up when I was younger, obviously grew up in a housing commission back at Woywee, used to call it the Bronx. So just went to public schools and had a good upbringing in that. But I started work pretty early, pretty much straight away. I was working in school holidays. Started all that pretty early. I guess cemented like, you know, what you got to do. You got to work hard to sort of get what you want. But back then, obviously, footy, rugby league was my profession. So I was thinking that that's where I was going to take me until some pretty bad injuries. And then I did, as you know, I developed before I built. So I started developing pretty much at 21. I bought my first property at 21 and renovated, developed that one, and then just went from there. Went overseas for a fair while, had a bit of a break, played footy over there and obviously lived there for a bit and then come back and just started ripping in. So that was probably realistically really sort of getting into it. Probably would have been, probably sort of like your time, probably 2014 was when around there where I really started giving it a nudge. And then I've obviously delved into another big development, which was the biggest one yet. It was a luxury 13. We optioned 2 sites together in Terrigal. Probably the best apartments there. Designed it all, knew it inside out. Funding went pear-shaped. It was probably about 6 years ago, I reckon. Went real bad, like
What
18,
happened?
20%. And just it's sort of what they're doing now, but maybe a bit worse. Just the arse fell out of it. So, we're banking on hopefully, 12s. And we're getting off at 18s and 20s. And probably the development that big at that time was probably a little bit, I'd do it now with my eyes closed. And it was a successful development. And then we had to sort of find JV partners, and we had a bit of an issue with one of the people that we JV'd with. I probably lost a lot of money, probably over
What
$500,000.
would you do differently? Like, what specifically would you do now if you did that again?
I wouldn't. There's a lot of vultures out there, as in this world.
We spoke about that.
Vultures.
We did.
There's a
Blue
lot of
and
them.
white collar vultures.
There's a lot
They'll
of them.
stab you from the front and the back,
Yeah,
right?
yeah. There's a lot of them. Avoid them.
Yeah.
And then I just know it inside out. Now that was a pretty big. That was a what did it end up being? I think their top apartments are selling for 4 or 5 million at the moment resale. So I'm thinking like I think by the end of it would have been the sales in that were about 20 mil. So it was a decent, and we were getting build costs in it about at that time ranging from 10 million through to 15 million. So site acquisition was it worked. It worked for the next person who kicked on with it. But it was just
So you didn't finish the project?
no. We went JV and pretty much got. I won't say too much. We got done over. And I probably lost about 500,000-600,000.
But you kept going.
Yeah, it's the only way you can do it, isn't it? So if you curl up in a ball and, I guess, I was involved with other people, but you can either just sit behind a rock and not do anything, or
Get back
or
up again.
the way I looked at it is I've always told him, well, if I'm going to make, if I'm going to make 2 million this year, well, I've really made 1.4. And that's the way I had to look at things. Or vice versa. If I made 600, well, I did make it in this year. So then what I did is I just did up another property that I held for a fair while, and it was a really good return. Did that up, sold it, and I might have made, 1-2 off that, but you take the 600 off, I made 600. So that's the way I looked at things. I couldn't look at it as if I kept looking at it as, I've lost this, I wouldn't have got anywhere.
Yeah.
So that's how I pushed through it, and
Lucky you have those other properties. Yeah.
100%. Yeah.
We
Especially
just
the ones
talked
that
about
was-
that, the safety net, right? It's so
Yeah, well,
important.
for instance, I bought one of them. Which was a steal. I bought for 600, I think it was, in Wombrel. Was put another bedroom in it straight away. Was getting rents over every week. Had it for 4 or 5 years, and then did a 300,000 renovation, sold it for 1.85.
Fuck, it's incredible.
All right, so that was the saviour, and that was
That would
also.
make you feel good after.
Yeah.
And it was funny because it's funny how things
He
work.
said that to me 2 years ago. I'll never forget. It was just before Christmas 2 years ago. And I said, we'll talk about the money. I said, it's all good, man. I just sold it for this. I'm
Yeah.
good. That's clean. I'm pleased.
And obviously I had the other properties there, but that was the perfect one to do. And to be honest, I was doing a development at the time when COVID kicked in, similar timing, and I was going to sell that property and I was going to get 1-2. So the way I look at it is I was going to get 1-2 before this shit hit the fan, and I just went in there and just done it up, did it up really nicely, but I put a lot of my time in it, so I knew I was going to get my return back on my time.
That's your profit.
And obviously had my building team in there. And then ended up selling for 185, and that was 12 months later because the market kicked.
Yeah.
It's funny how things work. So
It is
I'll
funny
take
how
it as
things
a
work. Take it as a win.
I'll take it as a win and piss the other one off. So that's how. Yeah, that was my sort of. I won't delve too much into the lost one, but maybe one day. Don't want to. There was a bit of law issues through that one as well, so I won't go too much into it. But that's how I got through it, and loving it now. So, but with the lending, that it is hard, but I've obviously got if I'm not self-funding or whatever, I've got a private lender, as you know.
Yeah.
And pretty good rates, and everything's really good with him. And so I've got the option there if we don't use the broker and go through, bank funding or second tier funding or other private lending. So he's always there
Yeah.
if I need it. So especially on these, if I'm doing, so the development I'm doing at the moment, it's probably got a TDC of probably 4.5 mil, somewhere around there, give or take. So if you do two of them, as you were saying, it's a fair bit of money for 2 projects, but we're looking at, 7s and stuff like that. So that's the play with these ones.
Well, you mentioned a good point before, Justin, about that market that you deal with being, I guess, mortgage free. Right?
Yeah,
that's a big thing at the moment, and that's where the demand is. Where there's a shortage in stock of this. I guess for this downsizer market that have got to say $4 or $5 million home, they sell it down tax free, and then they want to buy something for maybe $3 million, and have $2 million in the bank. That type of stock I'm finding is probably in the most demand and probably pushing up
Easy to move.
prices as well, right?
Yeah.
Especially if you hold on to them and you don't sell them off the plan straight away.
Yeah.
And that's where we're sort of seeing that opportunity as well. We're sort of trying to play in that space now, especially because the lending is residential.
Exactly. Yeah.
Because if we do more than, say, 4 or 5 dwellings, it turns into commercial. And the banks are hard on it with the vowels. And that's where we're running into a lot of problems at the moment.
You've got other challenges though. First of all, like you said, you're not a builder, so it's harder to do some of these things. And you've also got to deal with DA because you go CDC.
Oh, it depends.
Right.
Obviously I can't go CDCs on these luxury ones because generally the last one obviously had any same view. So I'm trying to do massive beautiful balconies that capture front and back. You CDC anything over 2 meters, you're restricted on a 15 square meter balcony. So I can't do CDCs on them. I can do CDCs on townhouses or high-end duplexes with smaller balconies and stuff like that. They're all fine, but the more of the luxury ones, you don't want to take away from the design, and you've got to take away from the design when you do a CDC.
Yeah.
So obviously the new one at Forries that we'll venture into, that's a possibility if I'm smart with the design, which we're starting now. But it's a timing thing. But now DAs are sped up. So 3 DAs have just been passed within 3 months, which is insane up here when they'll take 12 months. So they're speeding things up in there at the moment. So maybe the DAs, if it's a month or 2 difference, it's not that bad. When you're talking 3 months or 12 months, you got a holding cost of,
How have you managed that over time, like in terms of those delays and holding costs?
A lot of our sites are DA approved. So because
DA? That's what I do as well. And I do a section 96 on it and I commence.
So because it's already DA'd, what happens is our product, because it's in that affordable price point, we don't really need to alter it unless it's got a whole heap of concrete in it or something like that, where we've really got to rework everything. But because our stuff is at that affordable price point, if we're getting a DA'd site for, let's say 8 townhouses, for example, 3 stories high, they've already been designed for that investor. It hasn't been designed for that luxury market. And they're probably going to end up at, I don't know, 750 grand each. You know what I mean? So what more can we change on it? Maybe the facade, bits and pieces. And we sort of don't want to, because we don't want to add to the cost, because we're thinking about our bottom line. It's already tight for us, right? And for me, especially, I'm not the builder. So I don't really control that margin.
Do you have a builder? Do you tender to builders, or do you have a builder that generally follows you at the moment?
So we operate in 3 different markets: Newcastle, Brisbane, and Melbourne. And we have a builder in each one of those.
Right. And they do all of your developments.
Yeah, and you know what? I've found, your builder has to be your best mate.
Absolutely.
Do you know what I mean? Because I don't think you'll get ripped with other builders, but you will overpay. There's a difference, right? So and that's just the way.
It's a relationship thing too, you look after one another. And I like, as these guys know, I'm huge on relationships.
Massive.
Of course, and with I guess the average mum and dad building a home, or even building a development, for example, a project, if they're just doing a one-off, like, the builder's going to charge them a premium. It's just 100%. The way it goes, right? But if you've got your builder who there's a pipeline of sites,
consistent work.
You know what I mean? There's consistent work. They want to perform for you. They want to work with you. They become your partner, and that's why, like, I'm actually really interested in my builders sharing how much their margin is, and if looking a little bit tight, I'll go, well, let's work it.
Work it.
Well, you want them to finish the project, number one. You want them to still be
want them to be
successful.
profitable,
You
yeah,
want
exactly.
them to do your next one. So
You want them to be motivated.
Yeah, exactly.
Then I think what the average, I guess, mum and dad sort of builder would do is what they do, or developer, is they try and squeeze them on price.
Yeah.
And it's the same as real estate agents. If you try and squeeze them on price, they're not going to give a fuck about you, like when they go sell your property.
No.
So, they'll, for example, a real estate agent will come to me and say, oh, Zah, because it's you, I'll include GST on my com. And I'll always say, no, add it. Right, because I know you're going to do a good job. They love you for it. Those little things,
It's
you know,
true.
saying.
It's
And that's-
true.
after
you give
Well,
back.
that's
Yeah.
what
I've always
that's
said.
good. It's goodwill, right? Like goodwill goes a long way, even with you, with what we're doing. And I hope I've been a good motivator in this. I'm like, make your margin a premium.
Yeah.
Like you have
Yeah.
got to back
Yeah.
yourself because there's longevity.
it's going to give you the
in business.
product,
100%.
like, and I'm all about the product, as you know.
Yeah.
I'm
Make your time
so
work if you do it beautifully.
so particular on finishes and stuff like that. If I vision something in my head, it has to be that. So if you want, I've got a big philosophy around everyone that's involved in the circle. Everyone has to be happy.
Yeah.
That's it. Full stop. If it's the agent, I want him to be happy. If it's you, I want you to be happy. Just everyone. And it's the same. Like we use the same trades in my building company. So I've got the same sparky. I've got the same plaster. I've got the same everything.
relationships.
Yep. And I never change it. And I tell people that wanting to build from this is what it is. The only time I've changed if they just can't make the schedule. But we generally, I think they say, well, a lot of them give them about 60% of their work. So it's a good model, and everyone's happy on site, and we all look after each other. We're all open book with each other. I'm the same. Like we're pretty open book.
So for us, I guess, to control our side of the margin, it's up to us to take responsibility in what markets we actually buy the sites
Exactly.
in. So there's no point getting Justin to build something out in bumfuck, right, where it's not going to grow in value.
Yeah.
And that's my fault because I've bought the site there. Justin would be happy to build it because he's going to make his money.
Yep.
So it's my responsibility to go, hey, I've identified this market. It's going to gentrify. I'm thinking it's going to move probably 10% by the time the project's finished. That's going to add to my margin. Obviously, we try and calculate it at today's rate, so we buy the site well. But the contingency is a really good market.
Yes.
And this is where I see a lot, like you guys are developing in really good markets here, like the premium suburbs of Central Coast, which is what I would do if I was part
There's
of
a
this
lot of
Yeah.
buyers. A lot of buyers.
It's
here
attraction,
around, mate.
yeah.
Still, we're just getting so many people move here, and look, to be honest, it's shifted that quick. That 5 years ago, a big sale on the Sunshine Coast was 3 million.
Yeah.
It really was.
Now it's much higher, much higher.
Now 3 million is normal.
And I think a lot are moving to the coast from Sydney, but then they're
Huge.
also moving
Moving
up to
further.
Queensland.
Exactly.
Yeah,
Well,
the same-
Even Melbourne's
yeah.
doing the same thing.
Well, that's
And
why
so-
we've been going back and forth up there, because there's an appetite up there that I want to be.
Yeah.
Bit of Brisbane, obviously not further than Broady, but down to sort of thing.
Yeah, I was at the Gold Coast on the weekend. I was like, I want to live here. This is
Mate,
a
there's
cool
50
place.
cranes. There's 50 cranes from Broadbeach to Tweed. Like
I know there's
it's-
building happening everywhere, construction everywhere you look.
It's insane.
But hearing what you were just saying about identifying the market, because I've heard you talk about this and it's super impressive, the information you know and how you understand where to buy. What are you looking at? Because you're looking at so many different factors. It's not like just follow the lead of someone else. You're researching this constantly to look at where's your next move. So how do you go through that process?
Look, it's data driven.
Yeah.
So you look at mature markets like Sydney, for example, mature in relation to the rest of the country. Sydney is the number one market in Australia, but it's unaffordable for us to even produce the stock there or even buy the site, right? So what we identify is the demographics within that location. So a really good example would be Randwick, which is 4 k's from the CBD.
Yes.
Really close to the east. It is the eastern suburbs.
Not far from Gym.
Yeah, exactly right. So the income, I think the average weekly family income of that demographic in that suburb is about $3,500 a week, right? Where you can go to, say, Brisbane, same distance, 4 or 5 k's from the CBD, same demographic, $3,500 a week weekly family income, right? So 10 out of 10 affluent score. That's how we score it.
Yeah.
But a house there will cost you maybe $1 million. Now a house in Randwick median price is 4 million.
It's insane.
So it's that value proposition and going, okay, well, I can identify value. It's the exact same people with the exact same jobs, with the exact same incomes, right?
Yeah.
That's going to get pumped up
Yes.
in Brizzy.
Has to.
right?
So much more market.
Especially
Exactly.
if they're going north as well. Like that's where the population's heading.
And you can buy a site for $1 million. Like,
Yeah,
that's
and
unheard of in
a
Random.
good site.
Cracker site.
Yeah.
By the river.
Yeah,
Right? So if you look at that value proposition, it makes sense. And that's that contingency I'm talking about, right? That's why there's so much risk with developing in Sydney at the moment, because it's actually quite volatile and it's so overvalued, right?
Yeah.
When there's other markets, when you think about it, Brisbane is next door or Melbourne's next door. It's the same in Melbourne. Like you can be, we just picked up 2 sites, $1 million each. You can put 5-6 townhouses on them. 10 Ks from CBD.
Yeah.
You know,
As long as you're in that circle, that like you said, that 10 k's radius, that's perfect.
yeah,
The difficulty for some about
incredibly flat as well for you boys.
Yeah,
right?
yeah.
So like it save on cost there, and you know it's the value proposition. So if you can focus on those markets where you've got that precedence in Sydney, where you've seen it grow, and you've seen, for example, Randwick grow to 4 million in terms of a median house price, that means it will happen in other markets. It's not impossible.
Definitely.
It's like
But what do these
Well,
guys do
Brizzy-
who are builders in Sydney? They want to do their own projects, and this is a challenge
hard.
they can't. It's hard, right? Really hard.
It's like the meetings I've been having up in Brisbane and like southeast Queensland. They're saying that the build developer model up there for what we do is really good, because apparently they're lacking in quality builders up there.
So the Sydney
that's the
builders should
rumours
move to
I'm hearing.
Brisbane. That's what we're saying, or the Gold Coast.
Pretty much, yes. But they
Move
said
your
the
business
model.
there.
Probably get paid more.
Yeah,
They said the
exactly.
models, the trades are cheaper up there
Yeah,
than down
yeah.
here. Trades are more expensive on the Sunshine Coast than what they are at Sydney.
Yeah, right.
It's weird. I think this is a smaller sort of exclusive pocket.
Yeah.
And there's plenty of work here. But yeah, up in Brizzy, they reckon the builder developer model is really good for. And look, same thing. I can look in southeast Queensland and Brizzy, and I think I was looking in Balimba.
Oh, cracker spot.
Oh, how good is it? And the auction was last week, and it was like what you could put on there, wait for 1.6 or something, but looking over like for the river, and I'm thinking, imagine that. So they're the places.
value.
It's insane, and the market's hot. Like you got the Olympics in 9 years.
Yeah.
And to be honest, Brisbane has lost money over the last 10 years. Yeah. So I looked at an apartment up there that we're staying in, because I go up and see my mates' missus all the time. And I looked at it was I think I could get it for $680 or something. 2-bedroom in they're right near Suncorp Stadium, Milton. And they bought off the plan in 2014 for $860. I'm like, it's insane.
There's
But
value.
this is
There
where
was- there
you
was
talk.
no
when
money
yeah, but
before.
that's the difference. Is like mine have all been very, very, very good. They've performed very well that I've bought from you. And you always said to me a number of things, and I think Matt Sharp talks about this too, which is buy, say, a townhouse, which is what I've looked at. Townhouses, you develop in suburbs where they are mostly owner occupied. They're affluent. People want to live there, want to move there. They desire to be there. There's shopping centres. There's infrastructure, et cetera, et cetera. Is that what you still part of your method?
If we can find the product, and that's
Yeah.
the issue at the
Yeah.
moment, because a lot of us developers aren't actually producing it.
Yeah.
We're sitting on sites and we're not launching projects because, for example, that same townhouse that you bought for say 650 grand is now, it has to launch at 950
Wow.
100%.
for it to be profitable.
Well, the growth in Brisbane in the last 12 to 24 months, and that's what I was trying to say before. Before there wasn't a lot of growth, but now it's going to, and it's just going to continue. It has to.
And Brisbane's sorry, Ryan.
no, yeah, you go.
Brisbane is actually a beautiful city.
It
I
is.
love it.
It is
I actually
lovely.
like.
It's so nice.
I always say every time I go up to the missus, it's just a bit cruisier.
Yeah.
It's a bit more relaxing. It's not as big. The roads are a lot better. You know what I mean? To have just with all the overpasses
Yeah,
and all
less
that.
traffic.
And I say
That's right.
I could out of a city I could live in Brizzy. It's just I'm a
lovely.
big fan of it.
a lot of
Just a
potential.
question, right? It's a question with a bit of heat behind it. Okay, so I'm going to give it a bit of context and a bit of frame. So we know from this chat, Zah, you've been previously much more into bigger developments in terms of scale and how many lots, for example. Hilly, you've been much more like single dwelling, really luxury. We know commercial rates right now are starting to really squeeze, and we need to find extra margin. And you've got your oyster in terms of the ceilings you're setting. So collectively taking both your mindsets right now, do you think maybe not in coastal Sydney, but in particular up in the South Queensland and Brisbane market, there's this opportunity to take both of what you're doing,
100%.
which is more scale, more lots, more opportunity in our development sites, but with more luxury style townhouses, etc. So we're getting best of both worlds.
Yeah, there definitely is a demand for that product. The issue you've got at scale is that you're pressured to move the product, and especially now you're pressured even more, right? And the only way you can move product fast is through investors. Now, the issue with investors is they don't want luxury. Do you know what I mean? They want yield.
Yes.
They want affordability. And for us to build luxury now, and Justin, you could probably back me up on it, you're going to have to sell something for $1 million plus.
Yeah.
Now, to get an investor in and say, hey, you're not going to live in this property, but you're going to buy it off the plan. It's not going to be ready for 2 years. I need 120 grand off you now, right? It's going to be 1.2 when you finish. Is the incentive, well, where's that market, right?
There's no emotion in it. It's just numbers.
It's hard to find that buyer.
Exactly. Yeah.
But with what Justin's doing, where he's sort of doing maybe, say a duplex, right? You've got 2 pieces of stock. They're super high end, right?
Right.
You're in an affordable market, but you're also in a blue chip area of the affordable market.
Yes.
It is and we're actually visiting it ourselves now as well, just to keep our capital moving. So we're not sitting idle on site. So we just bought one in Hamilton, Newcastle.
Yeah, right.
We're going to do 2 luxury duplexes on it, just to get our capital working, right? It's not what we normally do.
No, I was going to say I didn't think you'd go in this part, but you sort of have to.
Up to the market.
Have to,
And when Justin went to Queensland, I went to Noosa to meet a client up there, and where there's lots of margin up there is, like you said, Zah, it's not 100 of these complexes or units. It's like 5, right, that are really premium luxury right near the beach or within the circle, and we're talking about huge margins. So that's kind of almost consolidating your mind.
Bring it together.
It's a great concept and it's a great idea, and we've visited it, right? But the issue is, I think it's either one or the other. You either go at scale and get the commercial funding, and you just go all in on it, and then get the investors to sort of pump those pre-sales, or you go the really small stuff and go super luxury, right? I don't think there's an in-between at the moment.
There's not an in-between. No, there's not. And if it's, and like you said before, it's the demographic, it's the area, the blue chip suburbs. Like I could say, so Brizzy right now, high-end homes are killing it, right? But you've got to be New Farm, you've got to be Balimba, you've got to be, Indrapilli, around those sort of areas there. But you can sell property, really beautiful properties there for 5 to 10 million if they're done right. Like, you might be buying the site for 2 to 3, building a beautiful, $2 to $3 million home, 3-ish, and then you're selling it for 8. Like, they're happening. And whereas if you go down southeast Queensland, you go along that strip of Palmy and all that, no. It's they're sky homes, like they're full level luxury apartments, 4s, 8s, where you're getting the whole floor, the lift is going to it, and you're all getting views. And they're selling for a bomb. They're going for 3s, 4s. It's just like you said. It's just you got to suit the suburb. You've got to suit where you are, mate. If I could do sky homes here, I'd be doing it.
100. It's almost like instead of going out
the day it changes,
it's like just go up.
The day it changes here, which is obviously terrible, yes, but there's no stock. There's nothing there.
Yeah.
There's no land. But when it broadens out across, like obviously they've made the last change of R2s being able to do duplexes, not just R1s, which is a great change on the coast. Because there's probably under 20% R1 sites. And then to once they broaden that a bit more, and you can actually get that 8.5 meters above and go in 15 to stuff in suburbs, the sky homes will kill it here. It'll be like southeast Queensland. But you've got to suit to.
You see, it's so complicated, and it goes back to knowing your buyer. This is what we always talk about as the first step.
That's me first. Well, for my end, it is. Obviously, he knows his investors, right?
Yeah.
That's what they're finding.
Yeah.
I guess with us, I've got to say, righto, we're going to, my one, the one we're doing on an acreage on, it's going to be a premium acreage on. Central Coast Sports Grammar's right next to it. If people are coming up and spending $7 million for a home from Sydney, their kids are going to Central Coast Sports Grammar. Number one. B, it's closest acreage street it's the best acreage street in one, but it's closest acreage street to the beach. And there's no one next year. So there's just, they're out.
So that location is that location those characteristics makes it that blue chip location, right? So that even for you, it's that your contingency. So over that build period, you know that market's going to continue to be strong. And it's probably going to increase your margin, right?
Yes.
And you mentioned something interesting earlier with the Brisbane market, right? So some of those really nice suburbs like New Farm, Bulimba, and all of that sort of thing. Like we're actually doing this at the moment where we're buying sites for like 1.5.
Yeah.
We're putting a specky on it.
Yeah.
And we're making $1 million.
100%.
You know what I mean? And how long does a specky take to build? 6 months.
Wow.
Right? So, like, you don't have to go big to make money in this industry, right? And if you can do 3 or 4 speckies a year, right? You pick the right market, you get the right site, you buy well. You don't even need to build it yourself. You just get a Metron or whatever.
There you go.
100%,
Yeah.
And the location does the heavy lifting in terms of the margin.
Yes.
So, you know, I know this podcast is directed at actual builders, right? But even for the mums and dads, it is possible to sort of...
But even for the guys in Sydney, we're talking about that are struggling there, they can still do it in Brisbane.
It is possible, yeah.
I do probably 3 of them a year.
Yeah,
just
right.
because they're easy.
Yeah.
The banks love
Why
it.
wouldn't you?
You never get declined on finance.
Exactly.
Sales always stack up,
Yeah.
right? Your square
Makes
metre rates are
sense.
competitive.
Yeah.
They're obviously going to be a lot more competitive than
Yes,
yours,
100%.
right?
Yeah.
And the market laps it up.
Yeah.
Because of the school catchments and, you know, proximity to CBD.
Well, up here, it's that particular with blue chip markets. I'll call them blue chip streets, right? Well, blue chip suburbs, sorry, blue chip streets, because as you know, there's so many streets I wouldn't even think about developing in Wombrel or Long Jetty or Terrigal. I just wouldn't touch them. But there's probably, if you're not talking about the waterfront, there's probably 5 that if they pop up, I'm onto it. And they all link into each other. I don't know why. I mean, there's no particular super reason for it, but there are because I guess nice homes have been put throughout there. People want to be beside. It's very hard to build a $7 million home next to a $2 million home.
Yes.
All right. So you've got to be surrounded by these homes as well.
Yeah.
People want to be driving up their street, seeing a nice street, not just a nice house.
They all lift each other up, don't they?
That's right.
In terms of pricing.
Just that good people in your corner.
That's right, exactly. Talking of, you've got big, strong relationships with agents, right? Do you prioritize relationships? Because I've always bought direct from you, right? But do you use agents? Do they help you source the land, or how do you?
We do, but generally speaking, agents are some of the biggest scumbags. You know what I mean?
You've got to know the right one.
Yeah,
That's where I'm lucky.
they're only
exactly.
interested in their commissions.
Yeah.
It's really hard to find.
Sorry to the agents listening.
Well, generally speaking.
No, I know,
right?
But
There are a lot of good agents that we have relationships with,
Exactly.
and the way we pick them out is they have to have that genuine care for that end buyer.
Yeah.
Right? They have to have that genuine care for the seller as well. So it's very hard to find, right? Because there is a lot of money in what we do, and I guess it's the same for us as well when we're pricing up projects. Like, because of my influence, like, I can move stuff very quickly.
Yeah.
But the thing is the val's going to stack up for the investment that I can, right?
And that's what you got to take into consideration massively as well.
Exactly. And then, like, a lot of these guys, they pump out these projects because they need to get the pre-sales and they need to hit their margins. And then it gets to the back end at settlement, and then the investors, let's say $100,000 short on their vals, but they risk losing their deposits, so they're forced to tip in funds or forfeit their deposits,
Right.
right?
Got to tip in that 100K.
Exactly. Or forfeit the deposit and get out of the contract.
Yeah.
So we don't want to create a business like that because that's a headache, right? Like you, that's a bad brand on you. So it's really hard to find the right agents that can help price up things for you, but we do have those relationships, and we need the agents for the sites because we're developing in multiple different markets.
Yes.
I'm not there all the
Can't
time.
be there all the time.
that's
And at the end of the day, the person who has that site, they're going to an agent. So more than a buyer's agent, to be honest, they're going to the real estate agent, the local one there, and they're going to them. And that's why, like here, I'll never speak more highly of Matt, Trevor, and Jordan. Which is, we're like mates, right? So I get first dibs on everything, and they're the best up here, and they're regarded as the best team in Australia.
Yeah.
So it's a really, really good relationship. And obviously I've got mates that are real estate agents, the other ones, and I'd love to do business with them, but it's about loyalty, and I'm not going to wreck something that's good. So our thing up here is really good, especially because it's a bit of a niche sort of spot here.
Yeah.
And it's now where, I'll go up in 2 or 3 weeks and meet 2 agents up there in Brizzy and Southeast Queensland. Because same thing, I want to venture up there. bit of both, bit of building and development. So, but they're apparently I found out they're the two best in each area. So it's the same thing. So if we can knuckle down a good relationship with them, and I'll be honest, if it works, I won't venture to another agent. You know, but that's because the moment you do, see you later. If someone done it to me, but I see you later. So yeah, just try and form that relationship and keep it solid and do good for them, and they do good for you.
Yeah, our relationships are more. What we have is access to the off-market deal, because the issue is once it goes to market and you've just got everything on it, right? So, and that's where the relationship with the agent's really important. But you know, it's difficult to find because you don't know if they're talking to all of these other people, and that's what Justin said. It is relationships, and you sort of have to just deal with, because it's hard to manage multiple relationships, right? So for us, already we're in multiple markets, so we need to make sure that we can trust those people that are on our team in that market.
Trust is everything.
And like you said before, it's a partnership.
It's a partnership for sure.
So, and it is, and I look at it as long term. So I've been doing it with these guys, I think now solidly for 6 or so years, and I have not sold with anyone else.
Yeah.
I have, and most of the stock comes through them. Sometimes no, if I find something else that they don't have. But it's the same thing. They will come to me before it goes. Well, that's the rule. Before it goes, mate, look, I've got this. This is how much we can get it for. Can we make it work? I'll look and consider it for a week or something. If it doesn't work, then it goes to market.
Yeah, it's important to know that resale value as well, you know, like, because it's going to, and you want them to not pump up your tyres, right? Just so they can.
Me and Matt have walked through that many.
You know what I mean?
Well, me and Matt have walked through that many, and he said no more than I've said no.
Oh, that's good.
All right, so that's the difference, and that's where you know. It's like buy this. I reckon I'll go at a lot of things. I'm smart with it, but he will walk in and he'll go nah, and it's his. Like he's the one who's selling it. He's like, don't worry, I'll sell it to someone else.
That's really good.
Like that's when you know.
He cares about you.
100% he does, and I care about that bloke too. So. It's like, and it's the same thing. The one at Forries, it's like, righto, 1.5 purchase. It's not. We're not going there to do 7s and 8s. We're going there to do a 4. It's a 4. It's a 4 to 4.5. Right.
It's going to be 4.5.
So we're building to that 4 to 4.5.
Yeah.
Right. And that's it.
Yeah.
I'm not trying to. I'm creating a market, but this one over at Brush and the last one at McGee, I'm creating that market. Like I'm building that to be a 7 or an 8, and it's in my head, and I'm going to make sure it gets bought for that. So it's different.
Yeah.
It's a bit risky, but it's different, and you got to make sure the product's right. This one would be a beautiful home, but we know that all right, we're capping out at this build, and that's what we're designing to.
Yep.
Yeah, I can't go over, contingency of 200, 300k. We're capping out at that.
Yeah.
And then making the.
That's important to know in your market, isn't it?
Exactly.
With the product that you're dealing with.
Yeah.
Which is very different to us, where we're just sort of banging out accommodation.
Yeah.
But at the same time, like, we're trying to do it in a way where it is a cut above the rest.
100% in that particular market.
Exactly, because there's still good markets, right? It's not like you're out in west, you know.
It's still people's biggest investment, no matter.
Yeah, like we still try and put in Millet appliances, 3-meter ceilings, like all of those little things, ducted aircon.
Yeah.
Like that, it's what will sell afterwards.
Exactly,
you know what
that's
I mean?
right.
Well, you're buying for that price range, and you're getting those little extras. It's huge.
Yeah.
But also it's easier to get your people in to rent it too.
And not only
That's
that, the resale is going to be a lot better for it.
Exactly.
You don't have to pay to get it put in for them to get the resale.
And I think the issue is with our product is that there's so much out there that's just so generic, and it's just all it's thought about is margins.
Yes.
And that's the issue.
And I guess you're there to find those little,
points of difference.
But yours do look beautiful. They've always got a lovely facade. Like they've just got that feeling of luxury, but they're not priced ridiculously. And I think that's really important. You know, for me, I look at it and I do care what it looks like. I didn't go see it in person. I did care about the numbers, but seeing it look just nice and going, okay, I know that a person coming in to rent it's going to like it and stay there, that I care about that.
Well, it's a quality of tenant, right?
That's right.
And it's also the quality of the demographic that's going to buy it on the back end.
Exactly.
So a lot of people, there's a lot of investment firms out there that sort of just go, okay, just pump out stock.
right? It's reputation.
And they just go, oh, it's numbers, take the emotion out. But I believe there still needs to be some sort of emotion.
Yeah.
If you can't picture yourself living there,
Like, but you someone else living there.
how's that back end seller?
Correct.
Buyer,
Correct.
going to be able to picture themselves living there and then pay 100 grand more, 200 grand more, and buy it with the heart, not with the head, right? That's what you want to tap into.
And it's future investment as well, like you were saying, Lisa, and reputation, and like all that comes into play. So in 5 years' time, everyone's continuing to buy from you again and again and again. So you've got to be thinking like that as well. Of
course.
Similar to you, if one of your designs or builds doesn't go according to plan, just because you don't do something right, because for whatever reason your margins squeezed on the build, for example, it's your whole reputation. So
Our reputation and
relationships, absolutely. The relationships are not just with our, our key personnel or team.
Yeah.
It's with the consumer.
Yeah.
Because it goes a long way.
Well, they're buying the product.
Exactly. And they'll come again.
And they're recommending. And
well, you got to look through their eyes. Like I don't get emotionally attached to the property. I get emotionally attached to the journey of doing it and creating what I say I'm going to create, and seeing the people walk in and their
and be
eyes light up
amazed.
and fall in love, and then I'm done.
Yeah.
My head's already thinking about the next one. So but I am emotionally attached.
Accomplishment.
I'm emotionally attached to that.
laps around the main street. I forgot about you, Julie.
I'm emotionally attached in that period because I just want it to be as best as I possibly can, and then I've forgotten.
You're
about
out.
it. I'm out.
Great session, guys. Look, let's just wrap it up. You did a beautiful wrap up of the last one. You top 2 or 3 points of getting out there and starting as a developer. You are different. You're not the builder to developer, but you've got some good insights and you've learnt the hard way. So wrap us up, Zah.
Look, I think just like Justin, it's about the accumulation of capital, and we all start. Well, a lot of us start with nothing. So I think the key is do what you can with what you have. So Justin started out buying older properties and then renovating them and then moving on to the next one. I did the same thing. It was really just about accumulating that capital base and making sure I can expand that as big as possible, because that's what is going to determine the level and size of projects you're going to be getting into if you're self-funding. And most people will have to self-fund before they can attract the attention of private lenders and banks and all of that sort of thing. So
Because they want to see a bit of a background.
right? So that is the main that is the main thing that I would say take away from it.
Yep.
Build up your net worth
Yep.
so you've got something to leverage off.
Yeah.
And then that will determine what you can and can't do in the future.
Yeah, beautiful. So invest in property maybe if you don't have it yet, and then use the equity to
a bit of
develop.
growth.
It's going to be hard to save the money.
Yeah,
right.
that's
try
right.
to save $10 million.
Yeah.
It's not easy.
Can't
but try,
do it.
Yeah.
Try and do it in property.
Yeah.
You can do it in maybe
Quicker.
4 or 5 years.
Yeah,
And I'll be
beautiful.
honest as well, my renovations at the start did have growth factor in as well. So obviously I'm not doing renovations knocking them over in 4 weeks. I'm living in them at least 12 months. The renovations have probably taken 2 years. Been a bit of growth, growth over 24 months or 36 months. So you're getting the growth and then you're getting the
Momentum.
Look, it took me 10 years
Yeah.
to accumulate that wealth,
Yeah.
right? Like
Yeah.
it felt like it took forever.
Yeah.
But once you get there, man, it's happy days.
Happy. Beautiful. Thanks so much as always. Love your work, guys.
Pleasure. Thank you.
Thank you.